Hi, I'm Jeffrey Ong from Titanium Synergy. Today I'm going to talk about why invest in properties. Well, a lot of people have this misconception that buying properties beats stocks. Well, it's not true because I manage an equity portfolio and I have a portfolio of properties. Equities is for liquidity. The returns might be a bit lower because you can't really leverage much on stocks, but you can leverage a lot on properties and safely as well. Now, property without leverage, don't bother because you have heard about a lot of exotic countries like Cambodia, Vietnam, where there are growth stories and then, the mortgage is not available to you or the interest rate is ridiculous. Now, if you buy properties without leverage, you assume a capital gains of 6% and net rental yield of 5%. Why 6%? Well, studies were done. There was this thing called the Doomsday Book. For 1,000 years of track record in the UK, they found that properties double in value every 10 years. That's about 7.2% per year using the rule of 72. So 6% is quite reasonable. Now, total return of 11% per year, $100 will turn into $284 10 years later. That's 2.84 times X return. And in actual fact, the returns are likely to be less than 11% a year because there is taxes, expenses like refurbishment, minor touch-up after 5 years, void periods, agent fees. So it's likely to be 9%. That's even worse. Now, any time you have to enter a country where mortgage is not available, don't insist on buying properties. You might be better off buying stocks, and you buy the S&P 500 ETF. Assume total return of 10% per year, $100 will turn into $259 10 years later. But what if you leverage your properties safely? If you take a 70% loan to value ratio and a 5% interest on mortgage, assume a total return of 11% per year. Same thing, but the magic of leverage has turbocharged the returns. $100 will turn into $619 10 years later. That's 20% compounded annual returns per year. Then you might ask, why don't I leverage on stocks? Try going to a bank and say, I want to borrow, here's $100,000, I want to borrow $300,000 in Apple, to buy $300,000 in Apple shares. The bank manager will probably ask you to go fly kite, right? Because look at the daily volatility of stocks. This is the QQQ, which is NASDAQ ETF. The daily chart, it goes down. In fact, if you have a leverage factor of 3 times, 100,000 and to buy of cash, buying $300,000 of Apple shares, if the share price drops by 33%, you're wiped out, and the bank will margin call you gladly. So why do I still buy stocks? It's for liquidity. I can still achieve about 13 to 15% return. Look at the QQQ, which is mainly US tech companies. You just zone out to a monthly chart and you can see that it's a lot smoother. So don't look at the account every month and treat it like a business. When you invest in shares, for example, Apple shares, here's $100,000, you are a shareholder. You don't care about the share price. And $30,000 to $40,000 of cash flow is accrued to you. It may not be paid out as a dividend, but you as a shareholder, you have partaken on the earnings of the company. And it doesn't mean that when you buy the share and the share price goes down, you have made a mistake. Okay, you only care that the earnings and the revenue keep going up, the share price will definitely follow over the years. Give it 3 years, the best returns in stocks come in the 3rd, 4th, and 5th year. So be patient about it. So that's for liquidity. I can still get 14 to 15% return per year instead of keeping it in the bank as a fixed deposit and earning 3 to 4%. So both are important, both play a role. Now going back to real estate, take this example. This property has been found or sourced by my business partner Josh in Birmingham. It's a UK buy to let. That's a rental property. For those of you in US, a 3-bedroom semi-detached freehold property secured for £196,000. It is £8,000 below market value. It has a driveway, parking for 1 to 2 cars, and garage with scope to extend by the side. Look at the mouse here. located in a strong rental demand area of 1,001 to 1,200 per calendar month PCM of rental. This is the picture. These are pictures of the rooms, the house. In Titanium Synergy, we have the capability to get the very accurate valuation reports, and you can see that on average the valuation is £204,000, and we are securing it for 196,000, which is 8,000 below market value. So a purchase price of 196,000, stamp duty of 5,880, refurb cost of 10,000, total purchase cost of 211,880, expected rent is 1,002, agent fee 110, mortgage payment 631.22, profit per month is 458.78, profit per share 5,505.36. Take a loan of 70% of £196,000, which is 137,722. Down payment of 58,278 plus the transaction cost. All in, you put in £74,158. A mortgage rate of 5.5% for interest only. Return on cash from rental alone is 5,505.36 over 74,158 is 7.42%. Now, when you look at returns, surely you don't just look at rental, right? There's capital gain. So you can say the expected capital gains of a semi-detached is roughly about 7%. That's the UK average. In Singapore, landed properties have been going up 10%. So hey, 7% is a very reasonable assumption, right? A detached house appreciates by 8%, a terrace house 6%, an apartment probably 4%. This is quite in line in many countries. So 7% times £196,000 equals to 13,720. When you add the expected capital gains and the rental return, divide by 74,158, you get 25.9% per year. Isn't that magically better than stocks? So you can create tremendous wealth doing this. And the rule of 72 says that you double your wealth about every slightly less than 3 years, which is great. And this assumption ignores rental increase of 5% per year. It ignores the fact that you can actually take out all your money, say 5 years time it goes to £300,000, you bring it to a bank, you remortgage it and take out £225,000. Effectively, you have taken out every single cent, and then you remortgage, you recycle the money to buy another property. So Titanium Synergy collaborates with Piranha Profits, and I teach a property value investing course. If you are keen to find out about it, click on the link and enroll on the course. Titanium Synergy also provides a bespoke one-on-one mentoring and portfolio building service. So if you are keen to find out more, click on the link as well. And I'll see you again soon.